So today, the British pound, it just tanked, fell out of bed on news of the UK government wanting to do big tax cuts. Now, the reasons behind it all and what you think of it aside, this had a massive impact on the FX markets, not just the pound. And guess what? I called it to the day, and I'm going to show you how you can too. Now, before we get into the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so what I have here for some context is the monthly chart, okay? Every candlestick representing 1 month of price action for the pound. Now, it's the pound versus the dollar, okay? Because as you likely know, the dollar is the reserve currency of the world. It wasn't always. It actually used to be the pound many years ago. So things are priced in dollars, those major currencies like the pound and the yen and the Canadian dollar, and then other currencies are compared to each other. So the whole GBP complex got affected today. Now, reasons. One, the UK government comes out and says we have this massive tax cut plan. They're trying to help stimulate spending in the economy and more. The thing is, the markets and people didn't necessarily love it because they felt maybe it's a little inappropriate given the cost of living crisis they're dealing with and more. So I'm no UK politics expert, but guess what? You don't have to be. I'm going to show you something that is hard proof that loss forecasting can work and work even in these crazy volatile environments and be extremely precise. It's not every single time, but when it is, man, it is just right on the nose. So let me show you what I mean. So I'm going to bring over my portal in which I have in the markets outlooks. So you can see that right here, okay? So here's Q3 2022. So I worked on these reports on Saturday, July 9th. So they were reflecting price action as of Friday, July 8th, and traders got them by Sunday, July 10th. Now let me show you. There's 4 categories, all right? And Forex is one of them. So in the Forex category here, I start with the euro, but let me fast forward, take you down to the pound report. What do you see here, guys? In bright yellow, key timing point, September 23rd. That is today. Not one day this way, not one day that way. And you were able to follow that forecast for that date with my outlook that the pound was likely to continue lower, and it would have kept you on the short side of the pound, and it would have really helped you in today's acceleration to stay out of the way. So let's come back to the monthly chart and take it from there and see what's next. So this horizontal line on the chart represents the pound and the dollar trading equally, all right? Every dollar equaling 1 pound, every pound equaling $1. So when's the last time the pound was at parity with the dollar? Guys, it's a trick question. The answer is never. Never, ever, ever. And the charts prove it. So here on TradeStation, I can go pretty far back, but I also double check this. And yes, the pound has never been at parity with the dollar, but it's getting to be a real possibility coming up here soon. So let's look at how far down it's gone in recent times. And by recent, I mean 20, 30 years. Well, looks like more than that, almost 40 years. And that was in 1985 that we had a low 1.052. That's the lowest that it's ever been. That looks like it's going to be hit sometime soon. And in the coming weeks, I'm going to do my outlook updates for 20 of the top markets. You can see the tickers listed here, including all the currencies. And that's where I'll come up with my next forecast. So you saw it here, guys. I had a forecast for today, and for not just the day, but for the entire directional move in the pound to be weakness into today. And then it just completely got like another boost to the downside, right? If you don't want to miss out on information like that, then that's where you join my Outlook Annual. Okay, coming back to where we are now, I'm going to take this down right on the same chart to a weekly time frame so we can see what the more detailed action is of recent times. And I would point out that last week, okay, this week just completed, but the prior week posted an outside range. Now, a little tip about outside ranges. Depending on where they are in a trend, they're usually a sign of volatility, and when they're in a downtrend, they usually resolve to the downside. And that's exactly what happened. So this entire range of last week, the week ending September 16th, is important, and so I'm going to mark off those levels, and that's the resistance levels I would suggest you monitor, okay? If you know my Gann candlesticks techniques, that's when you could come in and find out even more resistance and support levels inside any candle, and that would apply here. All right, now let's go to a daily time frame. So on the daily time frame, you can see, look at this red candle today. This was larger than any red candle in recent history, right? RSI power zones are extremely oversold, but that alone doesn't mean that it's going to be bouncing soon, the currency. So on the daily time frame, I would absolutely come in and apply nano candlestick analysis to today's range. Again, you can do that in the Gann candlesticks trading system. I'm going to just show you here some of the key levels. Okay, so I've added in two resistance levels, again, based on my Gann candlestick techniques at 1.0948 and 1.1056. So there's more that would be dug up here, but these would get you going if you happen to be trading the pound or considering it. Maybe you are here in the US and you do business with a British company. Maybe you are in the UK and are actually affected directly by this. Well, it helps to know, at least to be aware of where things are headed. And unfortunately, they're not looking good for the pound right now. So remember that all of these global events, okay, economic policy changes, government actions, they're going to be intermingled and intertwined. So it's really important to stay on top of the key top markets. And again, I cover these in depth once a quarter. I also then have a review session to go through every single one of my sets of analysis. And in this case, my call for the pound that I made over 2.5 months ago was hit right on the nose today. So if you want that kind of information for your big picture analysis, you want to check out my Outlook annual. And remember, if you want the short-term movements of the US markets, like the SPY via the ES futures, the NASDAQ, and S&P 500 stocks, those I cover in my Skinny in the Mini. And the analysis you saw me do here today is just like what I do for shorter term time frames. It just happens faster. All right, guys, take a breather. If you're watching this into the weekend, relax, recoup, okay? Because the volatility is probably not going anywhere. The thing is, even if markets are moving to the downside, you can take advantage of that if you have the right education and tools, and that's what we look to bring you here at HEMAready.com. Okay, focusing on my price, time, and momentum trifecta, teaching you how to trade not only to the upside, when you can just throw a dart and win, but taking advantage of these downward moves as well. Remember to subscribe, like, comment down below, share if this was valuable education to you, follow, join my tribe if you haven't already, and I'll catch you on the inside. You can sign up with the link to join my tribe and get my hot, timely, actionable updates as soon as I publish them right to your inbox.